Speaker garu, sir.
Sir.
Sir, shall we start, sir? Krishna.
Yes, please. Yes, please.
Apurva.
Raj garu, good morning, sir.
Namaskaram, sir.
Namaste.
Honorable Region Council member, Namaskaram. Thank you very much
Namaste.
for your gracious presence.
Sir, thank you, sir. Thank you.
A very good morning, one and all. Let me introduce myself. I'm CN Alam Apurva, Executive Member of Rajamahendravaram branch of SIRC. I take the pleasure in inviting you all for today's joint virtual CP seminar that is being conducted by Rajamahendravaram, Kakinada and West Godavari branches. Hope you're all busy this July with the writtens and familiarizing with the new amendments and all, and hope this is a very apt session in a very apt time. Once again, welcome you all. And I request everyone to raise for the ICAI motto song.
Yaesha supteshu jagrati, Yaesha supteshu jagrati, Kamam 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 Purusho nirvimanaha Tadeva shukram Tada Brahma Tadeva amritamuchyate Tasmin lokaha shataha Sarve tadunatyati kaschan Etadvaita
Thank you, everyone. So today's topic being the income tax amendments and the Supreme Court recent decisions regarding the reassessment under Section 147. I invite our chairman, Rajamahendravaram branch's chairman, Raju, to speak a few words and address the gathering.
Thank you, Apurva. Am I audible?
Yes.
A very good morning, everyone. Rajamahendravaram branch is privileged to host today's seminar and honored to welcome today's resource person, CA Gopala Krishna Raju to the Godavari branches of SIRC of ICAI virtually. I heartily welcome SIRC member and our ex-officer member, CA Muppal Subbarao Garu, and hearty welcome to Godavari branch managing committee members, senior members and members of the Godavari branches and students to this virtual seminar on important amendments of the income tax by Finance Act 2022 and implications of the recent decision of the Supreme Court under Section 147. There are many controversies and issues on the judgment that is recently passed by Supreme Court. To discuss on the same, we have the eminent speaker, Gopala Krishna Raju. Thank you, sir, for accepting our invitation. And I am sure today's session will enlighten us more on this issue. Coming to future programs, the Godavari branches jointly organizing the VCM on charitable trust recent changes in the taxation by hosting by Kakinada branch on tomorrow from 4:30 p.m. and another VCM on accounting standards issued by ICAI for non-corporate entities by CA MP Vijay Kumar Garu on 23rd July from 10 a.m. At this junction, I do take this opportunity on behalf of the Godavari branches to invite you all the members of the three branches to participate in these VCMs also and make them grand success. It is brought to members notice that from 1st August 2022, CPE guidelines for mode of structure and structures of hours are going to change, like restriction of structured CPE hours through virtual mode and no free virtual CPE meetings and no hybrid CPE meetings are allowed. Interestingly, MCQs are mandatory for the virtual CPE to assess the participants' learning. Soon, MCQs also applicable for the physical events also. We will issue a circular once we receive the clarity and confirmation for the same for the benefit of our members. Lastly, my hearty congratulations to the 12,449 newly qualified chartered accountants and welcome them into our fraternity to make ICAI more stronger and make healthy companies. Thank you.
Thank you, sir. Now I welcome our guest of honor, SIRC member and ex officio of Rajamahendravaram and the West Godavari branches, CA Gopala to address the gathering.
Thank you, madam. Thank you very much. Good morning. Sacharaj, Chairman, Rajamahendravaram branch and the other managing committee members, CA Gangaram Garu, Chairman Kakinada branch and other managing committee members, and my good friend Ravi Kiran Garu, Chairman West Godavari branch and the other managing committee members, and today's speaker and the past regional council member, Sri Gopala Krishna Garu. A very good morning to all of you. Friends, I'm glad to be the part of this session because every time all the three branches, Godavari district branches, are conducting the meeting unitedly. Even a small 2-hour CPA also they are conducting unitedly. Because of that only the number of members attending is more compared with the single branch organizing singly solely. And also being Raju Garu is a senior faculty, and you can ask any issues on not only on income tax. He is having vast knowledge on all the subjects, including IBC and every issues. As Sacharaj rightly told, on the recent judgment of the Supreme Court, there are many controversies raised on this issue, section 147 and 148A also. So I request the members, please kindly utilize the opportunity of the veteran speaker, Gopala Krishna. Thank you very much.
Thank you so much, sir. Now I would request our Secretary of the West Godavari branch, CA Vishwanath Garu, to introduce the man of today's session, CA Dr. Gopala Krishna Raju. Over to you, Vishwanath.
Mute lo ఉంది.
Hello. Am I audible?
Yes, sir. Yes, sir. You're audible.
Thank you, Mr. Purva. A very good morning to you all, sir. I take pleasure in introducing our speaker for today's session, CA Dr. Gopala Krishna Raju Garu. CA Dr. Gopala Krishna Raju is a practicing chartered accountant, registered insolvency professional, and a registered valuer from Chennai. Gopala Krishna Raju Garu is the tax assurance and restructuring partner of Messrs. K. Gopala Rao and Co. Chartered Accountants, a public accounting firm with branches at Mumbai, Bangalore, Hyderabad, Madurai, Tiruchirappalli, and Tiruvallur. GKR Garu hails from a family of chartered accountants. His father, mother, younger brother, wife, all are practicing chartered accountants. GKR Garu served consecutive 3 terms of 9 years from 2010 to 2019 as SIRC Council member of the Institute of Chartered Accountants of India. GKR Garu have been awarded honorary doctorate in governance of GST in government sector by St. Mother Teresa University, Melbourne, Australia. GKR Garu is in the Independent Directors Data Bank and have qualified with distinction the online proficiency self-assessment test conducted by Indian Institute of Corporate Affairs under the aegis of Ministry of Corporate Affairs, Government of India. He has various other qualifications being valuation qualified valuation examination of the Insolvency Bankruptcy Board of India, qualified limited insolvency examination of Insolvency and Bankruptcy Board of India, associate member of the Institute of Cost Accountants of India with All India rank in intermediate examination, associate member of the Institute of Company Secretaries of India, twin postgraduate diploma holder in Operation Research and Financial Management from Pondicherry University, MPhil in Management from Tamil Nadu Open University, post-qualification course in Information Systems Audit, post-qualification course in International Trade Laws and World Trade Organization, post-qualification course in IND-AS, Indian Accounting Standards, post-qualification course in Forensic Accounting and Fraud Deduction, course in the International Trade Laws and World Trade Organization from the ICAI. He holds 8 NSE certifications in financial markets from National Stock Exchange of India. They are capital market, derivative market, securities market, debt market, commodity market, mutual funds, basic mutual fund advisor, and corporate governance module. GKR Garu has authored 2 books, Standard Costing and Variance Analysis for Professional Studies, and First Lessons in Information Technology for CA students, with 2 editions by Snow White Publishers, Mumbai. GKR Garu is a seasoned speaker on information technology, finance, and taxation, and a visiting or guest faculty for numerous institutes, corporate, and business schools. GKR Garu is the member of Institute of Directors, Bombay Chartered Accountants Society and Madras Management Association, and life member of the Society of Auditors, the Chartered Accountant Study Circle, and active Rotarian. Has been nominated to the Academic Board of the University of Madras, Chennai, Academic Board, Department of Commerce, Loyola College, Chennai, Finance and Taxation Panel member of FICCI, Tamil Nadu State Council, Chairman, Valuation Standards Board, All India Institute of Registered Valuers Organization, Academic Council member, DG Vaishnav College, Academic Advisory Board, SGNB Vaishnava College for Women, Chennai, Academic Board, Civet College, Chennai, Board of Studies, New College, Chennai, Board of Studies, Guru Nanak College, Chennai, Audit Advisory Board, Director General of Audit, Chennai, Executive Committee, Center for Entrepreneurial Development, Anna University, Chennai, Expert Committee on Corporate, Allied Law, CSR, Governance and Ethics of Hindustan Chamber of Commerce, and he has also been nominated for the Steering Committee of the Institute of Directors, Chennai. He is a passionate writer on technology and taxation in numerous journals and newspapers, columnist in Tamil Daily, The Hindu Tamil, and weekly Tamil magazine Nanayam Vikatan, and Puthiya Talamurai Kalvi. Regularly appears or interviewed in numerous Tamil TV channels and Tamil FM radios, including DD Podigai, Jaya TV, News 18 Tamil Nadu, Kaveri News, FM Rainbow. As a versatile speaker, DKR has addressed more than 600 plus meetings on GST to various forums, including professional bodies, Chamber of Commerce, Industry and Trade Association in both English and Tamil. He can be reached at gkr@kgrca.in, and he has his mobile number is 98400 With this introduction, I request the speaker of today's session, CA Dr. Gopala Krishna Garu, to kindly take over the proceeding. Thank you, sir.
Thank you. Thank you. Very good morning, friends. At the outset, let me thank all the 3 chairmen of this triple branch coordinated CP program by Rajamahendravaram branch, Kakinada branch, and West Godavari branch. Especially the respective chairmen, CA Satyaraju, CA Gangaram, CA Ravikaran, and the ex officio member and my very good friend CA Gopala Garu, and all the members of these three branches. A very warm good morning to one and all. Especially places of West Godavari, Rajamahendravaram, and Kakinada is very close to my heart. And people always, because my name, Gopal Krishna Raju, is a name very popular in this particular belt. So even though many of my relatives are from this particular place, Hyderabad, Visakhapatnam, and also these places, even though I'm born and brought up here, generally the shower of affection from these three branches and also Eluru branch is quite overwhelming. So I'm always thankful and privileged to be part of this program and also to address on this special topic. Coming to this topic today, and I always, and one more thing I want to share here. There are a few sessions I have personally in person, maybe pre-pandemic, when I was a regional council member. At that time, I have addressed Kakinada branch and Rajamundry branch. And at that time, it was a study circle, the West Godavari branches and all. It was a study circle at that point of time. So I have addressed at those days, and especially Kakinada branch and Rajamundry. Some of the programs I've even addressed for one full day session. So the kind of affection they have showered at that point of time was phenomenal. I even remember today. So I miss the physical interaction with all of you. But nevertheless, this virtual medium gives me a feel that I'm very close to your heart. Today's topic is very interesting. That is today's session is very interesting. I will directly take you to the Supreme Court decision. Yeah. Yes. This is a Union of India versus Ashish Agarwal. Or we can call it as Ashish Agarwal case. Now, before I venture into this topic, I'll give you a background. The background is there was a writ petition that was filed by Ashok Kumar Agarwal, okay, against the government of India. And this was a writ petition. And we got a decision with respect to this writ petition on 30/9/2021. So there was a writ petition which was disposed on 30th of September 2021. And the Supreme Court decision. So against that writ petition, there was an appeal made to Supreme Court on question of law, not question of fact. So that decision came on 4th May. So the appeal on the writ petition, we got the judgment on 4th May 2022. Now to appreciate this decision on 4th May 2022, I have to take you to this writ petition. So this is a 82 para writ petition. So I'll just take you to some of the important paragraphs. So I'll not read this entire judgment. Yeah. So only I'll take you to some of the important paragraphs. So what is those paragraphs? The first point which I want to share to all of you is, please look at this. This petition, along with other petition mentioned in para 4. So this was only one of the various writ petition that was filed. And these are the list starting from 521/2021. Kaukab Ghulam Muhammad Qureshi. It starts, goes, list goes. 74 writ petitions that were filed. My goodness. Okay. So many. Now, what is this? Why this writ petition was filed? So we are going to first understand why this happened. What is the issue? What is the mess that happened? Have been filed by individual petitioners because individual notice was given to challenge the initiation of 148 notice. My God. 148 initiation of reassessment proceedings. This notice was challenged by 74 writ petitions. 74 writ petitions. Now I want to bring to your kind attention the section that was before amendment and the section that was after the amendment. So I wish to bring to your kind attention those two paragraphs. Now please look at those two paragraphs, guys. Okay, so this is that paragraph. So what I will do, this was your section before the amendment. I will bring to page number 8. Please look at this. The procedure governing initiation of reassessment proceedings prior to coming into force was governed by the following provision. Now, Finance Act 2021. That means Finance Bill 2021, last year, Section 147 and 148 has been amended. Okay. Section 147 and 148 has been amended. Now, please look at 147. This is the old section. This old section is now replaced with the new section. Now, when they are replacing 147, 148, they inserted one more section called 147, 148 and 148 capital A. So please understand this. So next half an hour, please have a very free mind. Okay, free mind. I'm going to discuss because this is going to be the new law. What is old law? I'll just refresh your memory. I'm sure all of you are very clear with the previous provisions. Please look at this. If the assessing officer has reason to believe, this wording is from the old law or the repealed section. Now, what is the new section? Look at this word, reason to believe. If the assessing officer has reason to believe. Now, look at the new section. This section actually goes for more than one page. So it starts 147 and dash. Look at 2 pages and then 148 is come. Now look at the new section. Okay. This is the new section. The substituted 148 to 149 with effect from 1/4/2021 is, that's all. This is the section. From almost 2-page 147 is chopped down into just 2 paragraphs. Actually 1 paragraph only. If any income chargeable to tax in the case escaped assessment, matter over. This word reason to believe has created so many years of disputes, so many years of challenges. And one Supreme Court decision also I will refer. Okay. Now, what is the procedure so far done? The procedure so far done is, this is the old section. So, a notice will be issued under 148. So even though you have filed a return, assessment is over, or you have not filed a return, a 148 can be issued. Now what will be written in 148? We have reason to believe that there is income escaped assessment. So file a return of income. So within the stipulated time, you will file a return. Now, there is a reason to believe. Who says? The assessing officer has reason to believe. So the assessee has every right to ask the assessing officer, what is the reason? Why you want to reassess? What is the information you have? You can ask. But you can ask only after filing a return of income. You cannot ask, once I've got the notice, I cannot ask that particular question. Okay. Now, there is a decision of GKN drive shaft. I want to bring to your attention to a decision called GKN drive shaft. This GKN drive shaft, 2003 decision, what it says, we see no justifiable reason to interfere with the order under challenge. However, we clarify that when a notice under 148 has been issued, I'll request Jaluri Siva Naga Subbarao to kindly mute. Okay, good. However, we clarify that when a notice under 148 of the Income Tax Act is issued, the proper course of action for the noticee means what? Assessee. Okay, assessee, proper course of action. Now, who says? The Supreme Court. The Honorable Supreme Court mentions that is to file return, and if he so desires, to seek reasons for issuing notice, then you can ask, you have every right to question assessing officer. There is no procedure under the law to ask question to assessing officer at all. But Supreme Court deems it fit, you have a right to ask questions. Okay. So the assessing officer is bound to furnish reason within a reasonable time. This is not there in the provision, but this is there in the case law. So therefore, the case law has become a decision. The case law has now become a procedures. We have been following these procedures. On receipt of reasons, the notice is entitled to file objection. Now, 148 notice will come, step 1. Step 2, you have to file return. Step 3, you have to ask reason. Step 4, reason will be given. Step 5, okay, the noticee can file objection to that issuance of notice, and the assessing officer is bound to dispose of by a speaking order. So step 1, 148 notice. Step 2, you file a return. Step 3, you ask the reason. Step 4, the assessing officer will give you reason. Step 5, you will give the reason. Step 5, you will give an objection if at all you have. Step 6, overruling the objection, he may pass a speaking order. Katham. These are the 6 steps. Nowhere mentioned in the what you call it as the section. Okay, there is no prescription. But GKN drive shaft ruling was ruling. Okay, this GKN drive shaft ruling was ruling the past 2 decades. Past 2 decades, and people were following this ruling. So we will file, we'll ask question, that this will go, and this after the 6th point, speaking order will be given. Against the speaking order, I can file an appeal also. Okay, then appeal whom do I do? I have to only go to CIT appeals. So that was the procedure all these years. Now, what they have done, this procedure which has been following for the past 2 decades has now become a section. Has now become a section. And what is that section? So that section is, please look at this. So this is the new section. This is a very big section. Now, the new section is, this is the new section. This is 147. 148 notice. Now, 148A. This is a new section that was introduced. Now, what is 148A? Very important. All of you, please note this. Okay. The assessing officer shall, before issuing notice, so this was previously stated 148. That was the story before 1/4/2021. That was the story before the story from shell before issuing any notice under 148, conduct any inquiry, provide an opportunity of being heard. So I will read this para by para a little later, but conduct inquiry if required with the prior approval of the authority, provide an opportunity of being heard. That means you have to issue a notice stating that there is an income that has been escaped assessment. These are the points with me. If you have any objections, you file the objections, and an order will be passed accepting that objection or overruling that objection. This is not a speaking order. That will be an order under 148A. Order under 148A will confirm the reasons. There is no concept henceforth called as reason to believe. Reason will be confirmed mutually. Now, what is the purpose of holding information? No. I have information about you. You file return. We want to do assessment. What nonsense is this? This is not Supreme Court itself has said. If you have a reason, then you have to disclose it. So you disclose the information, right and royally ask tax. So that is what 148A says. So what is the purpose? And nowadays PAN number is given everywhere. Aadhaar is given everywhere. From so many places, the data are collected, and except the mole in my left hand or right hand or in my face. Yeah, other than that, every information is there in 26 AS and annual information statement. So when the information is already there with the department, and that information is my information, it is not my brother's information or my neighbor's information. My information, sharing it to me by the income tax department, why they should not do it? They have to first do it. That is what the section says. Okay. So provide an opportunity of being heard with the prior approval of the specific. Hey, assessee, this is your, you have not filed your return. You have escaped this assessment, and we have evidence. So what do you say? So you have to either accept. Okay, because surrender. One is totally surrender. Sorry, sir, I will comply with, I will pay tax, all this. So he will say, now I will follow this 148A order with the 148 notice. So that 148 notice, you have to file a return, and then assessment will be done. So this 148A is nothing but a procedure which was not codified in the law, but it was a Supreme Court decision of GK and drive shaft, has now become a law. Okay. So consider the reply of assessee furnished, if any, in response to show cause notice, and decide on the basis of material available. Okay. So whether it is whether or not it is a fit case to issue notice under 148, by passing an order with the prior approval of the specified authority, within 1 month from the end of the month in which the reply to is received from the assessee, or where no such reply is furnished. So he can even keep quiet. He can keep quiet. So then, since no reply is furnished, many it is happening. Because online they send 148A. Many of the guys, they don't know online at all. So they keep quiet. So then the 148 order can be passed. That 148 will follow later. So within 1 month, from the end of the month, in which the time is elapsed. So now, this is the procedure. Now what has happened is, in this case, to Ashok Kumar Agarwal, 148 notice is issued after 1/4/2021. Remember, 148 notice is directly issued, not following 148A procedure. Because they were going in the old method. So they issued 148. And this went to actually a High Court. This is actually a High Court. Okay. This is Allahabad High Court. Okay. Now, I want to bring your kind attention here. So look at this page number 2. Okay. All reassessment proceedings have been initiated upon notices issued after 1/4/2021. Now, these notices were given under 148, not amended 148, but the previous, what is called the old section 148. So now everybody got agitated. Now 148A you should give and pass an order that 148 notice will come. And after that, assessment order will be passed under 147. This is the procedure. So you have to go from bottom to top. What is bottom? 148A. An order will be passed. Then 148, the notice will be issued. Then the return will be filed. Then it will be assessed and order will be passed under 147. This is the bottom up approach method you have to follow. Now, without following that 148, a notice almost 9,000 notices plus has been issued. 9,000 plus notices. Okay. And in Allahabad High Court alone, 74. In Allahabad High Court alone. And in various high courts in across the country, the writ petition has been filed. Vacha, and a writ petition has been filed. Okay. Now, please look at this particular paragraph, especially GK and Drive tab I mentioned. Now, they were giving a department was actually taking one shelter here. Okay, so point number 1, all of you are clear that 147, 148, 149 has been replaced by 147, 148, 148A and 149. This is the replacement. So I already showed you that. So this is that. So this is your old section. This is with effect from. Now what is your old section? Your old section is 147. Okay. This is old section 147 runs for 2 pages. Then after that you have 148. Then after that you have 149. So don't have 149, 88. And after 149, it is not 150. 150 is not touched. 151 is touched. That is, these are all now old section. It is replaced now. Now what is the replaced section? I'll tell you. 151. Now what is the new section? The new section is from here. From what the effect from 1/4/2021. 147. The new 147. This is new 147. That is old 147. And new 148. You have old 148 also. Then after 148, you have 148A. This is entirely new section. 148 capital A. After 148 capital A, you have 149. Where the old 149 is replaced with 149. So 147, 148, 149 is replaced with 147, 148, 149 and also inserted with 148A. And also your 151 is also been replaced. So previous 4 sections is now replaced with the 5 sections. Okay. So very important. Now this is the procedure. Now please understand what has happened now. I'll take you to this Ashok. The department is taking one shelter. What is the shelter? Around March 2020, pandemic reached over, etc., etc., etc. The central government also recognized the difficulty and promulgated the ordinance called Taxation Other Laws Relaxation Ordinance. And this is the relaxation ordinance. And all the due dates were being extended by 3 months. So any due date that falls on 31/3/2021 has been extended up to 36/2021. This is what I don't want to go into all these things. So that has been extended. Now they are taking a view that as per this provision, I am eligible to issue notice because of the relaxation. Now, what the Allahabad court has taken a view. Okay, this is the view, and all these discussions and all I don't want to bore you with. I'll directly take you to the important paragraph. All the discussion in view of all the discussions. All the writ petitions must succeed. Wow, and are allowed. It is declared that the ordinance, that is the taxation laws, the relaxation of certain provisions, as enforced under 1/4/2020, are not conflicted. In so far as the explanation is concerned, we declare that the said explanation must be read as applicable to reassessment proceedings as may have been in existence on 31/3/2021. Okay. So we declare that such explanation must be read as applicable to reassessment proceedings as may have been in existence. That means what? You have already initiated a reassessment proceedings, but you couldn't complete that within 31/3/2021. If you couldn't complete within 31/3/2021, you can complete it within 36/2021. For initiating itself, you cannot say that no, I was sleeping in the entire corona period. Now only I've got up, so now I have time to issue note. No, that you cannot take. This sentence is very important. Okay, so what people generally will think, oh, this date is extended, no, so they can issue notice. No, if, like, look at this. We declare that the said explanation is correct as applicable to reassessment proceeding, which may be, it is not existence at all. You're only starting issuing 1/8. Okay, so therefore, consequently, the reassessment notice and all the writ petitions are quashed. How many? How many writ petitions? 9,000 plus across the country. Okay, 9,000 plus writ petition has been filed across the country, and only in this High Court alone 74. Okay, for your information. So many writ petitions has been filed in the entire country. So it has become a very big case all over India. And please look at this. It is left open to the respective assessing authorities to initiate reassessment proceedings under the new act. So that means all 148 quashed. So now go to the blackboard, rub everything, take your pencil, chalk piece, start writing fresh. Okay. So now issue 148A. Accordingly, reassessment notice issued is quashed. Okay. For assessment year 17-18. All writ petitions are allowed. Somewhere in the this order also they mentioned that all over India, so 9,000 writ petitions has been filed across the country. Okay. Sorry, not 9,000, 90,000. Please look at this earnings. This is the, look at the page number. It is required to be noted that approximately 90,000 such reassessment notice under 148 of the unamended Income Tax Act are issued by the revenue officers after 1/4/2021, which is subject matter of more than 9,000 writ petitions before. So, writ petitions are 9,000, 74 writ petitions in Allahabad High Court alone, and not challenged is 81,000 writ petitions. Right? 81,000 notices not challenged. 9,000 has been challenged through writ petitions, and 74 writ petitions only in Allahabad High Court. So this is this particular paragraph gives you that magnanimity. Okay, that's so big, how big the issue is. Okay, now the department was not quiet, so it is a challenge for them. So they went to appeal. So Union of India government versus Ashish Agarwal, and of course this is not one appeal. Like that, there were so many civil appeals because based on this Allahabad High Court, many disabled courts they have given decision. Tack, all quashed. Copy, paste, quashed. So now 9,000, that means 74. So like that, so 9,000 means almost you can say you can divide by 100. So that means almost 90 orders on an average you can take. So that means 90 appeals they filed, government filed in Supreme Court, 90 appeals. So this is appeal number 1, 2, 3, 4, 5, 6, so many appeals they filed. These are all the appeals that has been filed before Supreme Court. Okay. Now, I don't want to bore you with all this stuff. I'll only take you to the important paragraph because we have very limited time, and I wish to hear your feedbacks, your questions also. Okay, after this. Feeling aggrieved and dissatisfied with the impugned common judgment and order passed by the High Court of Judicature in Allahabad and other allied writ tax petition by which the High Court has allowed the said writ petition and has quashed several reassessment notices issued by the revenue, issued under 148 on the ground that the same are bad in law in view of the amendment, the revenue has preferred the present. before Honorable Supreme Court. Good. Now, similar judgments and orders were passed by various other high courts. High Court of Delhi, High Court of Rajasthan, High Court of Calcutta, High Court of Madras, High Court of Bombay. That list has been given. This is that. In Allahabad is the first case. In Rajasthan, then Delhi, then Calcutta, then Rajasthan High Court, again Madras High Court, VIT versus CBDT, then Bombay High Court. All these they have been challenged. Okay, so that is that issue. Now, I'm not taking you to those two sections was before and what is after. Those two parts also I have discussed. So now, what to do with this? Okay. Now I want to bring to your attention one very important paragraph. Okay, look at 148, the new section 148 is very important. This is the new section. Okay, from 1/4/2021. In this, look at 148. Before making the assessment, reassessment, recomputation 147, and subject to provisions of 148A. Subject to provision 148A was not there in the previous law. The assessing officer shall serve on the assessing notice along with the copy of the order passed on 148. So notice under 148 plus order under 148A has to be given. Then only that 148 is valid now. Old provision straight away. I am the king. I am the assessing officer. I have every right to ask the assessee. You have to file the return. Now it is not so. 148, he will file a notice. They will say, I have this information. What is your answer? You can counter it. You can quash it at that stage itself. And there will be an explanation. There will be 2 or 3 rounds, 4 rounds of explanations to the assessing officers. And he has to file, he has to pass a order under 148. And that order copy has to be given along with the notice under 148. This is mandatory. Now, I'm taking you to the next important para 6.2. Look at para number 6.2. This para 6.2. Under the substituted provisions, no notice under 148 can be issued without following the procedure prescribed under 148. This is very clear. This is the wordings of Supreme Court. This is the interpretation of the new 5 sections instead of 4 sections. 147, 148, 149, 151. Instead of that, you have 147, 148, 148A, 149, and 151. So this is the new section, and all these are online now. Okay, everything is online. So you have to be very, very careful, cautious in understanding the facts and the information, and then you have to properly submit the explanation, and to the satisfaction of the assessing officer, you have to explain that, and all these are online. So this is very interesting. What is called the prescription in the new. Now, what has happened now is, please look at page number 27. Any questions are there? Somebody was asking questions. Any questions? No. Okay. So now, please look at this paragraph. Look at the last one. So, all these discussions have happened. Now, what happens is, what Supreme Court does. Therefore, we propose to modify the judgment and order passed by the respective high courts. So, please understand, Supreme Court has not quashed the high court judgment. They only modify the judgment. They only modify the judgment. Now, what is the modification? So, this 1, 2, 3, 4 and all I am not going to discuss. I am only taking you to para number 10. In view of the above and for reasons stated above, the present appeals are allowed in part. So that means assessee is also 50% correct. Department is also correct. Now what is that? The impugned common judgments and orders passed by the various high courts in Allahabad and other courts Okay, is substituted, hereby modified. The impugned section 148 notice issued to the respect to assessee. Please watch this. Beautiful. Very nice. I don't know how this interpretations has been done. Okay. So people can actually have a reservation also with respect to this wordings. But the way that, see, somebody has thousands of appeal has been quashed. I mean, thousands of notice has been quashed for only one reason, that date is after the date you have issued it. Now, the notice issued under 148, which are issued by unamended section, which were the subject matter writ petition before, shall be deemed to have been issued on 148A. That is. So the notice issued under 148 after 1/4/2021 shall be deemed to have been issued under 148A, not 148 notice. It is 148A notice. All the 90,000 reassessment notice is not 148 notice. Even though it is named as 148, it will be treated as 148A notice. So it will go to bottom. Why you are one step you are skipped? Okay, go to bottom. That notice is valid. So that means that notice is 148A notice. So now let the assessee give an answer to it. You respond to it and give an order as though it is a 148A, and then give a fresh notice under 148, and then ask them to file a return, and then do the assessment and pass an order under 147. This is the what do you call the decision? And this decision, I want your complete attention again here. As the assessing officer shall within 30 days from today provide with respect to assessee material relied upon so that the assessee can reply within 2 weeks thereafter. So what is the date? The date is 4th May. 30 days from that is 4th June. From that date, 15 days. So 4 plus 15, so 20. I mean, what do you call the 19th of June 2022. Reply will be given, and based on that, again, many notices still going on. Some of them they have passed an order under 148A. Now 148 will be issued. So this is the present situation with respect to this reassessment. So in short, the notices issued under 148 after 1/4/2021 is quashed because the old section doesn't prevail. Now, when the department went to Supreme Court appeal and based on the question of law, so then the Supreme Court they understood the gravity of this scenario, and then they said this 148 notice will prevail, but not as 148, but as 148A. So there is a beautiful advertisement by Tata Salt. Okay, आज से नमक को नमक नहीं कहना, Tata नमक कहना means salt. So in Tamil, the advertisement will be like, இன்னிலேந்து உப்பு உப்புன்னு சொல்லக்கூடாது, Tata உப்புன்னு சொல்லணும். So meaning, so from 4th May 2022 onwards, all those 148 notice should not be called as 148. It should be called as 148A notice. Deemed to be. This word deemed, so far I have only read in section. But in the order, in the, what do you call as, in the court order, first time I am coming across this kind of very interesting interpretation. Very interesting. Okay, shall be deemed to have been issued under 148A. A notice issued under 148, deemed to have been issued under 148A, and all the procedure will continue. So that means the sanity of the notice issued by the department is not lost. Okay, otherwise it's a great blow. It's a very big blow for the department also. And it is not that government or the judiciary has intervened, or I will even call it as judiciary has intervened and has upheld the pride of income tax department by giving such a interpretation. So thereby a new lease of life is given to the 148 notice given at that particular point of time. So notice was issued 1 year back. Now the life has come to that notice as a 148A notice. Even though the time has come, so you can extend it. It's a very interesting piece of judgment. Okay. So friends, any questions are there on this aspect, I will take it. Else I will take you to some of the important amendments, changes under Finance Act 2022. Very important main changes I'll take you through.
Sir, this means any new notices given under 148A after 1st of April 2021 cannot go back to the assessment years relating to either 6 years period or 3 years period or 10 years period, right, sir? More than that.
Absolutely. The time limit is given there. The time limit is given in 151. Time limit of notice given in 149.
Beyond 3 years, if the income escaped, if they deem that the income escaped is more than 50 lakhs, right, sir?
Absolutely. And you have the conditions called as assessing officer has a possession of books of accounts, documents, evidence which reveal that the income chargeable as escaped assessment is 50 lakhs or more for the case.
Yes, sir. But what is happening here is they have got data from the bank through AIR, and in those banks, what they have done is they have reported the same amounts twice and thrice and all that. So where the assessing officer had made some diligently made some copy of the statements and all, by then itself they must have known that the amounts are not properly reported. In spite of that, if the value exceeds 50 lakhs, then they are right. But when there is duplication of reporting, because of that, if the value exceeds 50 lakhs, can we contest that the notice itself is invalid?
No, because as far as he is concerned, he understands that the income escaped is 65 lakhs. But actually 115 lakhs or for example 120 lakhs is duplicated.
Yes.
It is only 20 plus 20, 40 plus another 20 is there, that is total 60 lakhs, let us say. The third 20 is one duplicate entry of the previous two 20s. So there you have to give an explanation stating that your reason for sending a notice under 148A. So since the notice has been issued by the department, answer the query appropriately stating that transaction 1, transaction 2, transaction 3 is a duplicate transaction. So therefore, the net transaction is only 40 lakhs. Point number 3. Now, since the net transaction is only 40 lakhs, therefore, time limit for issue of notice is actually elapsed. And this is one very, what do you call it as?
Peculiar situation.
No. It is a question of fact. One fact is wrongly interpreted, thereby the extension of time is gained by department. But fact has been properly explained. So now that 40 lakhs is escaped assessment instead of 60.
Yes.
Okay. So therefore, whether time limit is there or not is a question mark. Now this 60 or 40 department is able to get cleared only after issuing a notice under 148A and getting clarification. So therefore, my view is at the point of time, as per the evidence available, because the word evidence, there is no interpretation saying that the evidence should be a non-duplicated evidence. It should be a true evidence. it should be authenticated evidence. All those wordings is not there. Evidence can be false also. Evidence can be fake also. As you said, evidence can be duplicate evidence also. This is a place where the assessing officer, the assessee has to disprove the assessing officer, But with respect to issue of time limit, you have to challenge it before you have to litigate it. But my view, litigation only will be there, but because the court will ask whether 40 lakhs escaped assessment, yes. Then what is wrong? Why you are stopping the assessing department to do the assessment? In the interest of the nation, let the assessment go on. Because at the point of issuing notice, the department was having the evidence for 60 lakhs. You have proved it. And the acceptability of the income is below 50 lakhs. But that will not invalidate the notice issue. This is what if I sit as a judge, this is how I will give a judgment.
So subsequently, they can assess for 40 lakhs.
So it is very tricky. You can litigate. I don't say you cannot litigate, but I have taken a very simple issues. Maybe if more facts are there, possibly we may make it.
And he need not get a copy from the bank just to confirm or corroborate his evidence. Not required. The assessing officer.
Assessing officer can get whichever data he wants because he has to give a copy of that evidence.
Yes.
If I ask for an evidence, he has to provide the copy because I have to explain.
In the AIS data, let's say, like you said, it is 60 lakhs. But is it necessary for him to get a copy of those bank statements before issue of 148-year notice? That is what.
So he has to make himself
Yes,
ensure because the word says possession of books or accounts. The assessing officer has in his possession books of accounts or documents or evidence. Has in his possession evidence which reveal that the income chargeable to tax has escaped assessment. So he should possess the evidence.
So once he gets the copy from the bank, it will be clear that the amount reported is is above 50 lakhs for a wrong reason.
Dhulipala Vishwanath Anand, you are
yes, sir, yes.
One of the fertile branches of this country, and you are a smart professional. Let us not estimate or let us not equal assessing of that they are all smart. Many assessing officers are agriculture background. They are BSc agriculture, BL. They are chemistry graduates. So let us not expect such smartness from them. They will always think like that only. Okay. So any other question? I must really appreciate you for this nice, wonderful question. Any other question?
Also about the website issues, sir. Sometimes we are facing the problems of website. Can we take a stance that we couldn't reply because of those issues?
What is it? What can you repeat?
Network website is not properly working. The income tax website where we are supposed to submit our replies.
Okay, with respect to 148A.
Yeah, not just that. In general, also when they ask for some information, we are finding it difficult to submit those replies. In such cases, can we take any shelter and submit replies belatedly or something like that? How can we approach that?
Kindly take your technology support. Take screenshots showing the date and time that uploading was not possible. So and another 2-3 screenshots relevant time within the due dates before crossing the due dates, that the system was not permitting you to upload the reply. So that is, and also put it in writing and attaching all those screenshots to the respective assing officer, and also as a matter of courtesy to the one senior officials above him, that this matter is brought to your kind attention to kindly resolve at your end. So because from my end, my network connectivity is maximum, and from your end, I'm not able to access your server. So you need not ask for extension of time, but you have to bring the facts to them that you are unable to comply with the technological barriers. So automatically, you must be given the comfort to or an opportunity to actually upload the reply alternative. Any questions other than this? Shall I proceed to the next one? Yes, how about
Yes, sir. Yes, sir.
okay, right. So now let me take you to this is a new section 194R, and there is a 194R, and you have a guideline. This is actually a circular dated 16th of June 2022. So let me discuss this in detail, and I'm sure you will have I'll also take one particular income tax section, which is section 28, which is a charging section for profit and gains from business or profession. In 28, subsection 4. So this is the section I want everybody's attention to. The value of any benefit or perquisite, whether convertible into money or not, arising from business or exercise of profession. Okay. So arising from business or exercise of profession. This is value of any benefit or perquisite. This section, what it mandates, whether I am in profession of film artist, okay, engineer, consultant, chartered accountant, company secretary, cost accountant, then doctor, any perquisite from my profession, maybe in the form of gift, okay, then even reimbursement of expenses, okay, so gift, reimbursement of expenses, and foreign travel, okay, so all this stuff are very interesting inputs given to actually retain the profession, especially for doctors, okay, especially for doctors and for other professionals, and also sales promotion. So for sales executives or for the dealers, so sub-dealers, stockist. So they will be given benefit or perquisite. And that benefit or perquisite in non-monetary terms is an expenditure. Now, how do this benefit or perquisite can be in the form of unbilled stock, can be in the form of jewelry, can be in the form of a QLED TV, can be in the form of foreign travel, okay, within the India travel, anything, okay. So all these years this has been a deductible expenditure, but I want to bring to your kind attention, okay, one very important section. This is, please come to this. Clarifications on allowability of expenditure under section 37. Now, I want to bring your attention to this particular decisions, especially please look at DCIL versus PHL Pharma Private Limited decision. And this is one decision which is very, very interesting. Okay. So please look at this. Then I'll take you to, okay. I want to bring to your attention section 37 also they made an amendment. 194 R also they made an amendment. So two amendments they have made parallelly. Okay. So let me bring to your attention now. Okay. Good. Now look at 194 R. Any person responsible, any person for providing to a resident any benefit or perquisite. This is 28 subsection 4 or subclass 4. Whether convertible into money or not, okay, so that means whether in money form or not, arising from business or exercise of the profession. So these are the wordings from 28.4. By such resident shall before providing such benefit or perquisite, as a case may be to such resident, before providing such benefit, ensure the tax has been deducted in respect of such benefit at the rate of 10%. So it is almost another 194J. 194J, 194R. Provided that in a case where the benefit or perquisite is wholly in kind or partly in cash and partly in kind, but such part in cash is not sufficient to meet the liability or deduction of tax. Respect the whole of such benefit, the person responsible for providing such benefit shall, before releasing the benefit, ensure that the tax has been paid. My God. So, tax portion, cash portion, and non-cash portion. And the cash portion is 10,000, non-cash portion is 4 lakhs. 4 lakhs and 10,000. But the TDS is actually 10% of 4 lakh 10. That means 41. Cash portion is only 10. But you can only deduct 10. But remaining, how do you do it? So then 10 you have to pay to government. Remainder 31 you have to pay from your pocket. So before releasing the benefit, ensure that tax has been paid. Ensure that the tax has been paid in respect of the benefit. Now who has to pay? The person who is making the payment only has to deduct. But they are giving an alternative also. Provided further, the provision of this section shall not apply in case of resident where the value of aggregate is does not exceed 20,000. Provided also the provision of this section shall not apply to individual or HUF whose turnover, okay, in the case of business of 50 lakhs and the case of profession doesn't exceed. It is 1 crore in case of business or 50 lakhs in case of profession. Now, this applicability of 194R, they have brought a circular. A very interesting circular. Okay. So the guidelines for removing difficulties under 194.2. So this is your 194. The subsection 2 is where is it? Sorry, 194R. Guidelines for removal of difficulties under subsection 2 of 194R, where they have it is effect from 1st July 2022. From this particular month, this new section is applicable for 10%. Now, please look at this Q&A. One by one, let me explain this. Is it necessary that the person providing benefit or perquisites needs to check the amount is taxable under 28(4) before deducting 194R? Not necessary. Okay. For example, I am giving in the form of the perquisite. It can be either a color TV, okay, LED TV I am giving, jewelry I am giving, some foreign travel tickets I am giving, or a local travel tickets I am giving. Okay. Should I have to check whether it is taxable for them? Because maybe they will not be coming under that bracket of 2,50,000 or 3 lakhs. So you are only giving a coupon of 1,50,000. So can you say no, they are not taxable? So therefore TDS is not applicable. No. Okay. So no, straight away no. Okay. So TDS has to be deducted irrespective. Okay. And that is why they have also highlighted one more Supreme Court decision. Pilcom versus West Bengal held that tax is to be deducted. There is specifically indicated therein no need to see the taxability or the rate of taxability in the hands of the recipient. Okay. So TDS is TDS. Let him get refunded. Is it necessary that the perquisite or benefit must be in kind for 194R of the Act? Not necessary, because section says in cash or in kind or partly in cash or partly in kind. So tax under 194R is required to be deducted whether the benefit or perquisite is cash or in kind. Okay. So this proviso clearly indicates the intent of the legislature that there could also be situations where benefit or perquisite in cash or benefit or perquisite is partly in cash in kind, partly in kind. Okay. So perquisite in cash or the benefit or perquisite is in kind or partly in cash. So all the three, only cash, only kind, cash and kind. Now where can be cash? Reimbursement of expenses is cash. Okay. Where can be kind? No, we will not give. Entire travel, we will take care. Entire stay, entire food will take care. That is called kind. Partly in cash, partly in kind. Okay. So thus 194R clearly brings in the scope, the situation where the benefit or perquisite is in cash or kind or partly. Now, that is why whenever professionals are getting reimbursement of their bills, so especially the TDS part, this time, generally for 194J will apply only for the fees, not for the reimbursement of expenses. Okay. Now, whether the reimbursement of expenses, okay, will come under the 194R is the question. Okay. We have an answer here. Please wait. Okay. Especially bank audit and all, the travel stay will be reimbursed. Okay. Travel stay is a normal thing. Okay. We'll come for that particular thing. Is there any requirement to deduct tax under 194R of the Act when the benefit or perquisite is in the form of capital asset? Okay. Now, for example, that is what I was mentioning about various jewelry would be given. Okay, gold coin will be given, and QLED TV is given. Okay, or furniture can be given, or mobile phone can be given, laptop can be given. Okay, so just because it is capital asset, TDS is not applicable. No. Okay, so it gives various case laws. Thus, it can be seen that the asset given as benefit may be capital asset in general sense, like car also can be given, land. But in the hands of the recipient, it is benefit or perquisite and is accordingly held taxable. So in any case, deductor is not required to check if the benefit is taxable. Thus, the deductor is required to deduct tax under 194R in all cases, whether revenue or capital, doesn't matter. Now, whether sales discount, cash discount, or benefit are requisite, it has to be subtracted from the invoice. Okay, if it is given separately, what is the consequence? So please understand this very important question. The sales discount, cash discount allowed to customer from the retail price represent lesser realization of sale price. To that extent, purchase price is also reduced. Logically, these are benefits to related to sales. Since TDS and 194R is applicable to all firms, tax is required to be deducted. However, it is seen that subjecting these to tax deduction would put seller to difficulty. To remove such difficulty, it is clarified that no tax, very important sentence, is required to be deducted on sales discount, cash discount, and rebate allowed to customers, because this will be subtracted from the invoice. Cash discount in the invoice, sales discount from the invoice, rebates, all these will be subtracted from the invoice. So therefore, that will not be subject to TDS. Now, this is not going to stop here. There could be another situation where a seller is selling its item from its stock in trade to a buyer. A seller offers 2 items free with the purchase of 10 items. Okay, it always happens. So you buy 1 beer free. 1 for 1 offer. Okay, 1 plus 1 offer. Okay, in substance, the seller is actually selling 12 items at a price of 10. Let us assume the price of the item is 12 rupees. In this case, the selling prices would be 10 into 12, that is 120 rupees for 12 items. The buyer, if he has purchased 12 items at a price of 10, just like seller, the purchase price is 120 for 12 items, and he is expected to record so in his books. In such a situation, again there could be difficulty in applying 194R. Hence, to remove this difficulty, it is clarified that on the above facts, no tax is required to deduct under 194R. It is clarified the situation is different when free samples are given, and above relaxation would not apply to free samples. So, offer when it is given, no TDS. But when free samples are given, TDS is there. For example, you buy 11 pack, I will only price for 10 pack. So 1 plus 1 offer, 10 plus 1 offer, 7 plus 2 offer. Actually, I will give you 7 packet, but I'll bill for 5. So that 2 is free, but the pricing is inclusive of all that, and you sell it at a higher price. So therefore, bringing the concept of TDS here will be very difficult because you don't account for that offer. Okay, that only goes as a benefit to. Okay, so therefore this is very important. Similarly, this relaxation should not be extended to other benefits provided by the seller in connection with its sale. To illustrate, following are some of the examples. When a person gives incentives other than discount rebate, because discount and rebate will be subtracted from the invoice in the form of cash or kind, such as car, TV, computer, gold coin, mobile phone, TDS applicable. Okay. When a person sponsors a trip, TDS applicable. When a person does a free ticket for an event, okay, for an entertainment event, TDS applicable. When a person gives medical samples free to medical practitioners, then TDS is applicable. Okay, good. Now I'm going to discuss on this particular aspect also one more in section 37. I'm going to discuss. Okay, because this is actually having one more impact on 37 also. Okay, because all these years without TDS, people have been deducting this as an expenditure, as a sales promotion. Now, I want to bring to your attention this memorandum. Now, please look at this memorandum, where they are very clearly mentioned that CBDT-wide circular noted that Indian Medical Council, in exercise of statutory powers, okay, of IMC, Professional Conduct, Ethics and Regulation, imposed a prohibition on the Medical Practitioner Professional Association in taking gift, travel facility, hospitality, cash or monetary grant from the pharmaceutical and allied healthcare industry. They're not supposed to take. But there is no restriction on the, what is it, medical pharma companies to give. They cannot take. So that is why many of these medical practitioners, they will not take this gift, travel facility, hospitality, cash, monetary grant in their name, because they are governed by this professional conduct ethics and regulation. It will be received in somebody else's name. Now, the pharma company will debit that as an expenditure. For them also, ethics regulation not applicable. Somebody else is getting that benefit, but that somebody else getting that benefit is not, TDS is not. Now, medical companies, pharma company has to direct TDS for them. Very good. Now, instead, they are getting TDS, they will say, you give it to me. But they are not supposed to get. So that is one very interesting part. Now, please look at this. That is why this section has been brought. In order to make intention of the registration very clear, expenditure incurred by an assessee, that is a pharma company, for any purpose which is an offence prohibited by law, okay, then it shall include and shall include and always included expenditure by an assessee. It will be disallowed and it will be included as an income. That is what this particular section 37 says. So this will not be a deductible expenditure. So not a business expenditure, because it is prohibited under law. It is an offence under law to give the medical practitioners gifts. So it's a very interesting concept. So now the medical council also, maybe they have to come out with saying that, okay, if the pharma companies are giving you this, well and good, let them deduct TDS and give. You can receive it in kind. So we have to wait for that. Otherwise, now also this problem is there for the pharma companies. Okay. So now come to the circular once again. So the above examples are only illustrated. The relaxation provided for non-deduction for sales is only on those items and should not be extended to others. The rebate and discount is generally given in the invoice. Okay. And it's further clarified that these benefits may be used by owner, director, employee, or the relatives who in their individual capacity may not be carrying on business. However, the tax is required to be deducted by the person in the name of the recipient, since the usage by owner and director is by virtue of the relationship with the recipient, and in substance the benefit has been provided by the person to the recipient entity. Please look at this. That benefits perquisite may be used by owner, director, employee of the recipient entity, or the relative who in their individual capacity may not be carrying on profession. So this is what the example I said. The profession is carried by the doctor, but the benefit is received by the relative. Okay. However, tax is required to be deducted by the person in the name of the recipient entity, that is relative, since the usage by the owner director is by virtue of the relationship with the entity. So this is very interesting paragraph. Please understand it carefully. Okay. So to illustrate, they have given whatever I said is what is illustrated here. Free medical sample may be provided by the company to a doctor who is employee of a hospital. TDS under 194 is required to be deducted by the company in the hands of the hospital as a benefit or perquisite is provided to the doctor on account of him being the employee. So thus in substance, the benefit is provided to the hospital even though it goes to. Similarly, if the benefit is given to a employee, TDS has to be deducted to the particular hospital or to the particular doctor, not to the relative. That is what this mentions. The hospital may subsequently treat this benefit as a perquisite given to its employees under 17 and deduct tax under 192. In such a case, it should be first taxable in the hands of the hospital and then allowed as a deduction of salary expenditure. Thus, ultimately, the amount would be taxed in the hands of the employee and not in the hands of the hospital, because they receive and they give. So it is debit as well as credit. Hospital can get credit of TDS under 194 or a vanishing return. So it's very, very transparent now. 100% transparency. So this transactions has to be planned and then executed. So it is not that easy task. Similarly, tax is required to be detected under 194R. The benefit or perquisite is provided to a doctor who is working as a consultant in the hospital. In this case, the benefit or perquisite provider may deduct tax under 194R with hospital as recipient And then the hospital may again deduct under 194R in providing the same benefit or perquisite to the consultant. To remove difficulty, the original benefit or perquisite provider may directly deduct tax under 194R in case of the consultant, in case of a consultant as a recipient. Okay, so instead of doing a via media, the provisions of 194R shall not apply if the benefit is provided to a government entity, government hospital not carrying on business or profession. That is the only exception they have given. So many things are not there in the section, but in the circular, the clarity is given. How the valuation or the benefit is carried out? The valuation will be based on fair market value of that product. Or for example, a television is given. What is the fair market value? I would have bought it at a selling price. So I would have bought it at a price. That price only will be treated as a value given to them. So it's very important. Sometimes if I bought it, I will know the price. If it is manufactured, okay, so maybe I bought it long time back. 2 years back I bought it, but today I'm giving that article. So today's fair market only at the point of providing the benefit should be taken. Maybe I bought it at 1 lakh, but now today's the price is 1.75 lakhs. So TDS has to be deducted at 1.75 lakhs. So very interesting point. Okay. So whether GST will not be included for the purpose of valuation under 190, because this is already there everywhere. When TDS will be deducted, the GST part will not be included, and only the taxable supply. So not the total taxable supply plus GST will not be taken, but only the taxable value alone will be taken. Many a times a social media influencer is given a product of a manufacturing company so that he can use the product and make audio video to speak about that product. Is this product given to such influencer benefit or perquisite? So maybe a free of cost products are given. Okay, is given a product so that he can use and then he will make. So whether this benefit or perquisite will depend on the facts. In case the benefit or perquisite is like car, mobile, outfit, cosmetics, and if the product is returned to the manufacturing company after use, okay, then it will not be treated as benefit. However, the product is retained, okay, then TDS is applicable. Now, whether reimbursement of out-of-pocket expenses incurred by service provider in the course of rendering service, whether TDS is applicable. Very important section, very important question. Any expenditure which is the liability of a person carrying out business or profession. Please look, any expenditure is a liability of a person carrying out business or profession, if met by the other person, is in effect benefit or perquisite provided by the second person to the first person in the course of business or profession. Now, this is a very, very interesting interpretation, because when an audit has to be conducted, because everywhere we will have this particular aspect. Let us assume that the consultant is rendering a service for which he is receiving consultancy fee 1 lakh. In the course of rendering that service, he has to travel to a different city from a place where he is regularly carrying on business or profession. For this purpose, he pays for boarding and lodging exclusively for the purpose. Ordinarily, the expenses incurred by the consultant is part of the business expenditure, which is deductible from the fee that he receives from company X. In such a case, the fee received by the consultant in his income and expenditure incurred on travel is his expenditure deductible from such income in computing his total income. So the fee received by the consultant, chartered accountant, auditor, company secretary is his income, and the expenditure incurred on travel is deductible from such income in computing his total income. Now, if his travel expenditure is met by the company X, it is benefit or perquisite provided by X to the consultant. This is where the real challenge is. Okay. Sometimes the invoice is obtained in the name of X, and accordingly, if paid by the consultant, is reimbursed by X. In this case, since the expenses paid by the consultant is incurred wholly and exclusively for the purpose of rendering service to X, and the invoice in the name of X, then the reimbursement made by X, being the service recipient, will not be considered as benefit or perquisite for the purpose of 194R. Very, very important paragraph. Okay. I want everybody's attention to this paragraph. However, sometimes the invoice is obtained in the name of X, and accordingly, if paid by the consultant, is reimbursed by X. Okay. 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 So in this case, since the expenses paid by the consultant is wholly incurred and exclusively for the purpose of rendering services to X, and the invoice is in the name of X, then the reimbursement made by X, being the service recipient, will not be considered as benefit or paid receipt. So that means the traveling bill should be in the name of company. All the expenditure should be in the name of the company. Then if it is reimbursed, then the TDS is not applicable. So very, very important. So that means hotel bill, restaurant bills, travel, everything should be booked in the name of the company. So then the TDS is not applicable. Okay, so please understand this. This is something very, very special paragraph, very special paragraph. So the hotel booking, my name is different from hotel booking, the name of the company. Okay. So the invoice is not in the name of X, the payment is made to X directly or reimbursed. It is benefit provided by X to the consultant, for which the deduction is required to be made. This is to be noted. To be noted. Okay. If there is a dealer conference, okay, so dealers are given a lot of benefits. Okay. So certain expenditure conducted for new product launch, discussion on product, orders obtaining, teaching, sales technique, addressing queries, reconciliation accounts, no TDS, because that meeting expenses. Otherwise, apart from this, if there is any incentives, benefit to select customers, dealers for achieving target, then the total expenditure divided by the number of dealers who attend, it will be a benefit to them, and TDS has to be deducted and has to be paid. Now there is one more concept. Can the TDS be paid by the, because sometimes it is given in kind. So they will say, no, we will not give it to you in kind unless another tax is paid. Now the tax also I have to pay from my pocket. Sometimes the recipient, he will pay the tax, and if he gives the tax paid challan, then maybe the reimbursement can be given. All this stuff is possible. So very interesting concept. Okay. So now please look at this. That particular paragraph which I want to. Section 194R provides that if the benefit is partly in cash, then the person responsible for providing such benefit is required to ensure the tax required to be deducted and paid in respect of benefit before releasing. How can such person be satisfied that the tax has been deposited? So as an alternative, as an option to remove difficulty, the benefit provider may deduct the tax on 194R and pay to government. The tax should be deducted after taking into account the fact that tax paid by him as TDS is also benefit under 194R. Now, if a person is providing benefit, the tax is required to be deducted. The person is required to ensure the tax required has been paid by the recipient. Such a recipient would pay in the form of advance tax and he'll give the challan. And while uploading the return, TDS return, the tax paid by the recipient as an advance tax, that challan number, BSR number will be quoted. So that will be forming part of your 26Q. So the tax, what you have paid as advance tax, will come back to you as a TDS. Okay, very interesting. Very interesting. Okay. So it will not be shown in your 26 years or annual information statement as your advance tax, but it will show as TDS. Okay, your tax only, but it is shown as TDS. So it's very, very interesting para. Section 194R would come into effect from 1st July. Second proviso provides that the provision of this section does not apply when the aggregate value, okay, does not exceed 20,000. It is not clear how the limit of 20,000 is to be computed. Now up to 30th June, if only 18,000 is provided, still 2,000 limit is there. So after 1st July, still you exhaust 2,000, that TDS is not applicable. Now before 1st July itself you exhausted 20,000. From 1st July, every transaction for which that TDS is applicable. Now, in after 1st July, you have not done any transaction up to 1st July, post 1st July. So please look at this. Second proviso says, provision of the supply does not apply where the aggregate does not exceed 20,000. Okay. Now, the moment you cross 20,000, okay, it is applicable for the entire transaction. So there is no, what do you call the Lakshman Rekha, or it is called an exemption. It's not an exemption. If you don't cross 20, well and good. If even, for example, no transaction is done up to 30th June, and the 1st July transaction is happening, maybe until you cross 20,000, no TDS. The moment you cross 20,000, on the entire transaction, TDS has to be deducted at 10%. Okay, so good. So guys, any questions on this are welcome.
Sir, your explanation is very clear because we do not have any doubt in asking the questions, sir. We have crystal clear you are explaining actually. Thank you, sir. Thank you very much.
So then let me hand over the session back to all the three chairmen for the closing remarks.
I think since your explanation was so clear, there were no questions. But still, I would like to give a minute time, sir, so that maybe if anyone has any questions, we'll just ask you. So we'll just wait for a minute.
Sir, if I may ask, is there any relation or reason why fringe benefit tax has been removed and a tax or TDS of this sort has been applied?
No, I didn't get your question. Did you benefit?
Previously, we had fringe benefit tax.
Yeah.
Is there some relation between the understanding of fringe benefit tax and this 194R TDS, sir?
Maybe the objective of FPT was different. There, it was a different concept. Maybe we cannot equate that here. This 28 subclass 4 is not complied by assessees. So annually, many gifts are received, benefits are received. Those benefits are not in the course of profession. For example, you have a birth anniversary, you have a birthday, you have a wedding anniversary, Diwali, Shankranti, Telugu New Year's. So these are the days you get gifts from your relatives to your friends. Now, whether that will be taxable under 28(4), no. 194R applicable, no, because that is not in the course of profession or business. So that will not come under that. And your 56 subsection 2 and subclass 10 and also 7 very clearly mentioned. Up to 50,000 cash gift not taxable. Up to 50,000 kind gift not taxable, because those are all income from other sources, not in the course of business or profession. So this is only a gift or maybe perquisite benefit in the course of business or profession. So that is very important.
So let's say some software companies are giving laptops and all to the new freshers who have joined their offices. They will fall under this provision, sir?
Very interesting question. Laptops will be in whose name?
Usually the company's name, sir.
That's all. So no perquisite. You got the answer. So that is why reimbursement also, that expenses. As chartered accountants, our audit fee is 2 lakhs. Our reimbursement bill is 1 lakh. Now, hotel bill, food bill, travel bill, everything is in our name. Remember that 1 lakh will be taxable in our hands. So we have to show that as an income, and all these expenditure we have to show. Of course, nothing is taxable because we received and we have paid it. But it has to be shown as income in our books of accounts. So this is one thing which we need to be very careful in this year onwards. Fringe benefit tax, one thing that is purely with respect to employees, because employees are given so many benefits in addition to the salary. So in that angle, they brought it. Since you said about laptop, I'm connecting once again to that. So we cannot connect that terminology with this. Yes, Chairman Ravi Kiran, any feedback from your side?
You are given without any queries, we are given very excellent to that.
Hello.
Yes.
Sir, my question is doctors will get samples from manufacturers. Like he will not use that.
Pharma companies.
Yes, sir. So doctors will not use that, but pharma company will deduct TDS, right, sir?
No. Pharma companies free samples. These doctors are independent practitioners, or they work under an hospital.
They are independent practitioners.
Okay, independent practitioners. They are not supposed to. They can receive free samples of medicines.
Yeah.
But they have to. That 10% TDS is applicable. Number one.
Yeah.
Number two. But other than the free sample of medicine, can they get free gift bag, leather bag, mobile phones, free travel, LED, what do you call, TV? No.
Yes.
Because Indian Medical Council prohibits.
Yes, sir.
Free sample of medicine they can give, because that is part of profession. Because without knowing medicine, how can they? But that free sample of medicine is a cost. Further TDS is applicable to them. No other choice.
But for him, there is no revenue, sir. There is no benefit.
See, today, there is a beautiful sentence in English. No free lunch. What is the meaning? We are almost, it's a lunch time also now. What is the meaning of no free lunch?
You will not get lunch at free of cost.
Sir, this is what CA final student will do. What is the difference between cost control and cost reduction? Reducing cost is cost reduction. Controlling cost is cost control. And he will write that in different languages. Okay. I want only one answer. No free lunch means there is nothing free in this world. Clear?
Yes. Yes, sir.
When it is an expenditure to me, it should be an income to you.
Yeah.
It is a deductible expenditure to me.
Yeah.
Then it should be income to you. Matrix katham. That's all. It will be an expenditure to me, not income to you. Where is the equity here?
Okay. So
that is 28.4. Tell me 28.4 whether it is only in section in examination for 1 mark, 2 mark only we have read it. Whether anybody, let them touch their heart and say, free travel to Bangkok and Dubai, I have got it. But sir, please include that free travel cost, free boarding and lodging cost as an income under 28.4 and I'm ready to pay tax. Which SSA is coming forward?
No, sir.
No. Then let them pay tax at 10%. Then people have to be exposed. These are all the prerequisites. They have to pay tax. How can that be that my company, as a company, I will spend money. I will send these people to Bangkok and Pattaya to celebrate, but they will not pay tax on that. They have to pay tax.
Yes, sir.
Because it is an expenditure to me. That is why 194R will expose. The problem now is with once 194R 10% is deducted and it is reflected in 26 AS. If the 26 AS is printout is taken by the respective wife, wife will ask question, hey, what is this? This 10% is deducted by so-and-so company. and it says foreign travel. You have not told me that. You told me you only went to Pune. So these problems will come. I am not responsible for that.
Yes.
Apurva. Apurva, madam.
So I'll hand over.
I think there is no further doubts.
Yeah.
Maybe the time for closing of this one. Okay, Apurva, madam, can we close?
Yes, sir. I hope this Q&A session also can be ended because we see no other member asking for it. So thank you so much, sir, for taking out your time and sharing your expertise on the said sections and the issues. So I now request CACV and Gangaram Garu, the chairman of Kakinada branch, to propose the vote of thanks.
First of all, thank you very much, sir. Dr. Gopala Krishna Raju Garu. You had a very excellent session, sir. I have experienced it so many times, sir. It is really very tasty food, actually. When you are telling in simple words, the things that will be very easy for us to understand what is the grip and where is the concept and where we have to focus on the particular point. For example, section 148A and 147 and 148, how it is bottom up linings, and similarly 37 and other section also, that is 194R. You are given in an excellent manner. Actually, we have dealt with so many 37 problems with business persons, like cement are giving the gifts and like that, and travelings they are provided in our accounts. We have seen those things also, sir. But it excellently you have explained the things in such a way that in future we should not have that doubt where we have to place that amount, either as an expenditure or as a TDS has to be deducted or to be shown as an other prerequisites. Thank you, sir. Thank you very much. You have given excellent time for us. And this is the opportunity given by the Rajamahendravaram and our West Godavari branches, chairmen as well as the managing committee members. And Kakinada branch also have participated in this event. And we are very much thankful to each and one of the, and every member of the participants who have gained a lot by this lecture or deliver of the things, sir. I'm very much thankful to you, sir. And similarly, our Moppal Subbarao Garu, though he is very busy with the RIC meeting, SIRC meeting, he has participated and given us that time. Thank you very much, sir. Once again, I'm very much thankful to you, sir. We will definitely call you on physical basis at any time, sir. I will definitely request you to give us a time at the date, and definitely we will provide you that of course all the three branches will provide you in 2 days. One day you have to come to West Godavari, that is Yelur, and followed by Rajamundry and Kakinada also. Definitely we will show our this one, sir. Thank you very much, sir. We'll pray the God that very soon we will be physically meet at Kakinada.
Thank
and I will show you two Divya Darshanans also, sir. Pancharamams is there in Kakinada. Two main important temples are there. Definitely, I will provide you that
the blessings
offer,
of
sir.
God.
And at any moment, you are welcome to Kakinada, sir. There is no problem at all. We will do that, sir. Thank you very much, sir. Once again, thank you. Hope all will be benefited by this. Thank you, sir.
Thank you so much, everyone. So with this, we conclude today's session. And I thank every member who participated in this. Thank you.